What is up, everybody? We are back with another episode of Bullish's Top Stocks to Watch for the weekend. Why? Before we get into it, as always, hey, a couple things. These are my opinions. Do your own due diligence. Definitely not a financial planner. These are things that I'm watching, not necessarily playing, but generally I'll play what I'm watching throughout the weeks or week, right? Also, the second thing, realbullish.com will give us a follow, subscribe to our newsletter and announcements and stuff like that. I'm putting up some blog content pretty soon, probably in the next couple weeks. And I want to keep that kind of consistent as well to go along with videos because I have a fun time doing it. Also, real_bullish, wherever you get your social media poison. That's Instagram, Twitter, stock twits. But yeah, also, I'm going to drop a link. Just got some merch in. What's up? Bullish shirts. I like them. I washed them. They kind of feel good after the wash. They got a kind of a little bit smaller. Got some stuff on the back. It's not rocket science. It's just stocks, right? But I don't know what rocket science actually is. But anyways, I'll drop the link here and go support and buy some merch. I appreciate it. Anyways, let's get into it. I'm watching this week a few different things. Excuse me if I'm a little bit tongue twisted. I had a White Russian at about 10 o'clock in the morning, 11 o'clock in the morning. There's this really cool coffee shop down the street I went to, Ship Channel Trading Co. So if you're in Houston, check out Ship Channel Trading Co. Pretty cool guy. I think his name is Josue. They fucking love coffee, and they actually will mix in like they have White Russians, they have Irish creams and stuff like that. They'll mix in a lot of good stuff. But so that was kind of like my 11 o'clock or 11 a.m. after the gym. So right now I ate a little bit of food, but I'm still feeling a little bit. So I'm trying to drink this water. But anyways, trying to get this done in 17 minutes or less. Let's jump into it. I've already wasted a minute and a half or more. But the first one I'm looking at is Oscar. I'm trying to play it with the format of a little bit of what I'm trying to do. A couple that I'm really watching, and then some other ones on the list as well. I'm going to put in. But anyway, Oscar Health. There was some huge insider buying on 9/2. I have the chart up right now. Basically, their co-founder and vice chairman Joshua Kushner, so Jared Kushner's brother, he bought $8.77 $1 million worth of shares at the average price of 1807. So huge insider buying that came in over the past month. And August 30th actually is where the lockup expires. So basically, for all this is a newly traded IPO, as you can see from the stock. It basically started trading, March of this year, right? And with any kind of new stock, you have I think 6 months or so where you have a lockup period generally, and insiders can't sell into that date. The lockup period was August 30th, and I think you can see the charts kind of coincide with that. So I think that's why we're kind of staying in that range and stuff. I would actually wait for the break, which I'll show you here, of about 18 bucks. So I think that anytime you see like a huge insider buying coming in, especially around lockup periods, you have to play them smartly. So you definitely have that there you have like a set price that this is what they paid for it. So I don't want to necessarily pay too much more than that because that's what they're kind of fair valuing it at. Credit Suisse actually just recently came in from a price target increase to 34 bucks. I think that was in the past week or so. So Credit Suisse has a price target of 34 bucks for them now, and that was kind of the latest price target that came in. I love they're basically a tech health play. I think that's a super hot industry right now. Looking at Oscar Health, being in like the tech health industry, like I can see kind of where those trends are definitely going, and I like Oscar Health from a lot of different things. I downloaded the app, I went around with it. I checked their Glassdoor. They have a 3.6 rating on Glassdoor for 500 people that have worked their review. So that's generally pretty good. If you get somewhere close to a 4.0 rating on Glassdoor, I was looking through the messages. One of them said upper level management is Ivy League only and feels that they are better than everyone. So that's kind of like that kind of sets the tone for the company. Maybe they're a little bit pretentious, but also it's not unheard of in the tech world to have a bunch of Ivy League, Stanford graduates running it though. So it's being around the tech industry. I've been part of 4 tech companies now at this point, and you kind of see generally that kind of same thing going across. So that's not unheard of. So I think that's where they see kind of some of the working there, some of those headwinds, I guess. But anyways, let's jump into the charts. Like I said, Oscar Health, huge insider buying on 9/2, and you know how like to look at it month, week, day level generally. And what I like about Oscar Health right here is you have on the month level, you have the IPO, and you basically if you buy the IPO price, you're kind of fucked because you basically went straight down like that, lost 50% of the value easily, right? But what I noticed right here on August, so last month, there's a really strong hammer, right? Really strong hammer. This is great on the bottom, not necessarily the top. So you do see a strong hammer right here at a line of support. Let's call it 1554-ish, right? And what I like about that is it's using that level as support at now in this month for September at the month level, right? Still playing with that area here. So as long as that area holds, I'm not too mad at it, right? So I kind of want to see this do it 2 things. And at the week level, we kind of see the same thing, right? There's not a lot of information here because it's so newly traded, right? So you don't really have average volume. You're starting to get an RSI. You're starting to get a MACD at the week level. But basically, you definitely see kind of some indecision here. That indecision doji right here leads to a hammer at the week level. So indecision, hammer, and almost like a reversal here. So I kind of like this at two levels. I like this here at 1535, let's say, but I more like it at the break of 1836 because that shows that it's over that recent area of resistance, right? And it's using it as support. So I would love to catch this at the break. I have an alert here. If it breaks over this price, I want to know about it. But also, because you do have conceptually that area that Joshua Kushner bought basically $9 million worth of shares at 1807, you do see like that area being a heavy area of resistance right now. And once it clears that, if it does clear that, I think it's going to be really nice. Again, it's an IPO recently traded, but it's in an industry that's super growing. Someone's going to disrupt healthcare. I'm just not sure who it is. Even being in the industry, I'm not sure who it is. Hopefully it's us, but maybe not. But anyways, what I like about this, like I said, it's kind of like at the day level, still kind of playing in this range. I would love to catch it more at that 1548 because I think there's a lot of meat on the bones there. If it breaks that, you have to have your plan. Either you average down. Hopefully, you never have to do that, or you get out, right? And you kind of say, hey, my hypothesis is lost. But the best scenario to me would be the break of this area here. And that's when I really want to start looking at it. But you see a lot of indecision. So if you look even closer to the day level, a lot of indecision dojis, right? A lot of spinning tops and stuff right there. So it's right there. People are playing with that level. What's interesting though is there's been really like no volume over average on a selling day other than this one here. So it still has that area with it. So I think this is definitely one to watch. Definitely more of a speculative play, but I think it's worth looking at because their user base is just growing. They're losing money hand over fist, but that's what you expect from a high growth company in such a competitive industry like healthcare, right? And they have a worthwhile plan to disrupt healthcare, right? All right, so Oscar Health was the first one. The next one I'm going to is Disney. Maybe, and I've watched Disney off and on for a while, and I'll tell you the reason. Oh, I'm sorry, all these horrible lines that I drew. But basically, what I like about Disney, so there was a hard drop Tuesday. I think you might even be able to see that at the chart level. But there was a really hard drop on Tuesday. Boom, a three, right? Boom, all the way down here. Broadening formation here, which I do love. So Tuesday you had a really hard drop, 921 or whatever, and that was for a reason, right? So the CEO Bob Chapek he presented at the Goldman Sachs 30th annual Communicapalooza conference, if I'm saying that right. But basically, he said investors should expect a subscriber increase in the low single digit millions for Disney Plus. So basically, he's like curbing expectations for the Disney Plus subscribers because they've been on such a tear. They have 116 million subscribers as of right now, I believe. Or over the last quarter, right? They added 12 million subscribers in the last earnings. So he's basically setting expectations like, hey, it's not going to grow as fast. It's going to grow in the low single digit millions for Disney Plus for this quarter, right? So yeah, I think that that's an interesting call from him. But I think that it was a super overreaction because Disney Plus is just one of the things that is driving their company. They also have parks that are going to start opening up. They have cruise lines that are going to come back into play, and you have Disney Plus, which is also really good too. So, anyways, at the month level, you definitely see it selling off, right? In that news, right? It was already a hard month for Disney, right? You do see a strong red candle here. Sorry again for all these ugly lines, but I wanted to show you basically it's using this area right here at 167 as a real 168, let's call it, as a really interesting area of resist or support, right? And it's been doing that since May of this year, right? It's an area of significance to me. So I think as close as you can get to this line of, let's call it, maybe I can get a little closer, but basically, yeah, 171 is I think is going to be really interesting area for that. Let's keep it there, right? So at the month level, but it does look like it's selling off. You see RSI going down. You see MACD pinching to be bearish. So I think that there's still going to be some selling headwinds coming up. So I think it's still in a bearish formation, but you get closer to that line. I think that risk reward ratio is going to be really cool because you do have this area to lean on of one. Like I said, every time I look at it, it's something different. 167, let's say, as a really interesting area of risk reward, right? And say, hey, if it breaks under this line, my bull thesis is broke. I can sell it, but also you can have a plan to say, okay, great. If it breaks out of this area, blue sky is 201. This is my first price target. Then you set your second one applicably, or as you need to, right there. But at the week level, still, it's selling off, right? So I'm saying like this is something that you maybe want to watch, not necessarily play. And when you do play, be opportunistic for when you play because at the week level, you see, 60 million shares traded last week to the downside, right? You see it, but again, all that volume that went, it still didn't break this area of. You get closer, you get see a little bit better. Let's call it 168 area of support. It still didn't break that with over average trading, and it's done that twice. You see here where you're at the week of 510, and you had basically 70 million shares traded, still hit that line but didn't break it. So I think as close as you can get to that line is going to be a really interesting risk reward ratio for you to long because Disney's a company you want to long. I understand there's a short term headwinds, but I think Disney is definitely a company. But maybe just I'm like super bullish on the Avengers. Shang-Chi was fucking awesome. But maybe that's why I love it so much. But anyways, at the day level, I think this is at the week level is an opportunity to buy. RSI is going down. MACD is kind of running flat. So I think a little bit more sell off, and it's going to really make it interesting for me at this area right here. What I like at the day level is a broadening formation, right? You see the highs, you see the lows, you connect the two, and you get a broadening formation. There's this interesting group called the Strat, and I follow them on basically Instagram, or sorry, Twitter, but I think it's just hashtag Strat. They're a really interesting group, super passionate, kind of small, but super passionate, super smart too, and what I love about them is they kind of teach, and I'm not an expert at it yet, but I'm really interested in how they do it because I actually played it for PayPal this week, and it was pretty interesting win that I got there. But basically, they look at one, and I don't want to like butcher what they do, but basically one of the things they kind of look for is a broadening formation as a sign to do it. And what I liked about this is it kind of followed that because you had a broadening formation, you had a really strong three, which basically it broke this level down, broke this level up, broke this level down, and then went down to hit the bottom, and then you saw a nice 1-2 reversal on that. So I think it also, if it uses this area of 164 as an area of support, it could be interesting. So I don't necessarily have to get it at 168.43. If it holds this area here at 174, I think that those are two interesting areas to get into as long as it holds that, right? And it shows, hey, at the day level, it broke down and then it's kind of tapering down or kind of flattening out, say at the day level. So I don't think you'll get another shot at 168.5, but that would be interesting. But if you can hold it here at 174 or just wait for the break. But for me, I can long Disney. I don't mind holding that one. Okay, so those are two I'm really watching for the week, and the rest are ones that I'm kind of, looking at softly. And one of them is SoFi. And the reason why I was looking at SoFi was I was literally a day late to SoFi. I'm so mad at myself. But basically, SoFi was making some interesting moves here about the 14. Anytime you see SoFi under 15 bucks, to me, it was an interesting play. And I saw it just a day late before it took off. I saw this formation here, yeah, 920. So we're looking at like Monday or so. Yeah, I saw that and I was like, whoa, that's interesting. And then it just took off before I got another chance. But I like SoFi because Jeffries, and the reason you see that increase here at the day level is because Jeffries initiated a position and gave it a $25 price target. So, when you see companies like Jeffries or, Credit Suisse or, whatever, the big names that kind of have coverage, you kind of know that that's a really bullish area. What I want to see with this SoFi specifically here, and which I love because it kind of blew it out the water, right? So it hit this area right here that I was looking at 1705. So similar to I was looking at Disney, as long as it's fine if it broke out, but as long as and that's what you want to see. As long as it can hold this area about 1705, I think that that's going to be a really fun area to play with it as long as it holds it with a $20 price target, right? And what I say 20 bucks because that's like after it breaks out of this level, that's kind of the next area of that I see possible, just kind of two heavy resistances there or areas of significance, but I think you can use that as a general price target here. I would definitely want to keep it in that range. So if it breaks down with a stop loss, so basically if I'm breaking down under 16 bucks, if I'm going back to this area, I might want to think about selling it. But as long as it holds this interesting area here, 17 bucks, I think it's gonna play well here at this range and then consolidate up because you see RSI going up, you see MACD going up. If you want to learn about RSI, definitely look it up. Interesting thing to use, but also subscribe realbullish.com. You give me your email, I send you the RSI thing, right? I think that can help and just print them out, put them somewhere. But anyways, I like to use RSI and MACD in combination. I think that SoFi is a really good one as well. The next one I wanted to go to is this interesting one I wanted to look at was GRIN. And basically, if you know what Seeking Alpha is, GRIN has been basically one of their so Seeking Alpha quant ratings like top gainers, right? If you go to Seeking Alpha and look at top stocks, at the quant ratio. So basically using a lot of quantitative, not qualitative data to say, hey, I'm gonna point stocks against each other and see which ones are more value. GRIN was actually the top one for the past like week and a half. I think it's number 2 now. PetroChina took over as number 1. I'm not investing in China right now, but basically GRIN was like number 1 for a long time, right? A week and a half. Which if you stay in the Seeking Alpha top gainers or top stocks for a week and a half, wow, it's something interesting. And what I like about this is if you look at it specifically, like broadening formation too, right? But if you're looking at the month level, it's interesting right here, cup and handle. Right now we have the cup, we have the handle, and generally, if you're into cup and handles, there's this really good book called the Encyclopedia of Chart Patterns, and basically one of the things it talks about is how to spot them. So you spot a 30% increase, right, from the bottom to the top, right, or the difference between the lip, and then you use this area from the bottom of the cup to the lip to say what your price target is going to be, but also to what it should degress to. So for a cup and handle, you have a cup, you have a handle, and then you have a breakout, right? So you don't really want to buy it until it breaks out the second time for the breakout of the handle. Generally, you see a 10 to 15% decrease from the top of the cup to where the handle should start correcting for the upside. But since this is a bigger formation, you might see more. What I noted here was about a 13.44 area of like alerts. Like, hey, if it breaks to this level, let me know. The reason for that is I think it was there was a on 927. So coming up this week on Monday, I guess there's an offering for $13.50 to sell 20. It's going to close a $25 million sell of this. So I think that it's going to really race to this area here because people have a number and say, okay, people are valuing it. Someone that's selling $25 million worth of shares are selling it for $13.50. So that's why I want to pay for it. So I think it's going to break down to that 1350 area and then start that reversal up, right? And that's my hypothesis. And that's why I'm watching GRIN for two reasons: the cup and handle at the month level, but also because it was a seeking alpha gainer, right? The other one I want to look at is I know I'm looking at a bunch, right? But that's what I'm trying to do for this one, just trying to do a little bit more. The other one I'm looking at is CXM. CXM is basically follow my boy Chill Trades on Twitter, basically one of the smartest people I know. And he was like, hey, I'm going to watch this for the week, right? So I pull different things I'm watching from different areas, whether it be earnings, whether it be, seeking alpha or smart people just giving them to me and say, hey, what do you think about these, right? I think CXM is a nice setup at the month. You see this green candle at the month. It's an interesting setup at the week level. You see this super hard green candle at the week level. MACD's pushing up as well. Again, a relatively new company, but also what I like is that it's an interesting trading area here. I don't want to just yet. Also, like the CEO, he was on like Mad Money or something like that, Fast Money or whatever, and he's just like the swaggy ball dude, right? And as a guy who's gonna go bald soon, like in the next couple of years, like being a swaggy ball dude is pretty cool. So this guy has some swag. He's bald. He's a founder and CEO. Is exactly what you want to see. He founded the company and took it public, right? That's a hard thing to do, right? Because the things you learn as a tech founder aren't necessarily the things that are going to transition when you take a company public. And it seems like he's doing it right. Again, they're losing money hand over fist, but they have basically are at their second area of growth for the company. They went for the 10,000 biggest companies in America. They're still working on those, but now they're going for the next level, the next vector, he called them, of like a bigger group of 30,000 companies that are maybe a little bit smaller, but can add revenue to the company, right? And they're basically they call it CXM. Well, CXM is like a unified customer experience enterprise software. So basically, they'll take all of your data touch points for your customers across different levels, whether it be email, social, maybe even direct mail, put those together and kind of give you data that you can use to maybe track or talk to your customers a little bit better. Being in marketing, I love that because I think that's what every marketing company. I was just talking to coworkers Friday about that. Like every marketing team I've been a part of, it's really hard to track your ROI or how much you spend and how much you get for what you spend when you get to these other areas like direct mail, social. Really, it's hard to find how that corresponds to the money you get. And I think CXM is kind of like one of those companies really trying to do it. He started like in his basement, which is pretty cool. But anyways, I like this at a break or a bust. So if it breaks over this area of 1953, I almost bought this on Friday too. It poked over here, but I learned from my mistakes before. Sometimes you'll see it poke over, and that's what I wanted, but it wasn't going to hold. And I can show you what that meant. So I almost bought it because it broke over. It didn't hold over this line, so I didn't actually do it. But I would like a breakdown to this 17 area. I think that's a better way to play. Again, the risk reward. This is super speculative, but also I think it's worth watching because it's a hot industry. This is what I wanted to show you. Basically, about 9 a.m. it busted over here, so alert got sent to me. Oh, great, it's breaking out. I was actually in a meeting. I was in a meeting all days on Friday, but basically I was gonna just like trade it real quick, and I said, hey, let me chill because you really want to see a break and hold at the end of the day. So if it would have been like up here by the end of the day, I probably would have got into it. But since it broke, it busted my area that I wanted, but didn't hold it. I wasn't as interested in it. Okay, the last one, man, I'm trying to do this 18 minutes. Okay, the last one's actually I was trying to do it 17, but that's okay. NKE is the next one. You know me, I fucking love Nike, but what I did love also was that about their earnings. So their Nike just reported earnings last week, and it was basically there's some short to medium tailwinds, or sorry, headwinds in terms of what is going on with their supply chain. They're huge. I forgot the exact numbers, but there's a Seeking Alpha article about like Nike and their Vietnam influence. So Vietnam contributes a really important quantity of products, shoes specifically for Nike, right? And if you following what's going on with COVID and the Delta variants, it's running rampant in Vietnam, and they're really strong lining against it, right? And that's hurting Nike's supply chain there. Also, their one thing that wasn't talked to as much, but there was an interesting Motley Fool article or podcast about it, was how their growth in China is actually slowing down over this quarter and last quarter, right? So those are all interesting things. Nike's going to be fine, but I think that those short term or medium term, also headwinds are going to really cause the stock price to go down in the recent thing. And what you notice here, and what I was actually hoping for, it was a gap filled to the downside. So this was their last earnings, right? Busted up. You see a gap here. Gaps usually want to get filled, and that's exactly what we saw here. But it's interesting thing to me. This was earnings that happened, right? And there was a gap into a gap, right? So a gap down into a gap already. And that's just like, wow. So this is an interesting area. I do not see it holding this area. So there's a far downside, maybe over here to 135, right? I want to catch it there. I still believe in Nike long term. I still believe that I'm a Nike fanboy, but still, if you look at the charts, it's pretty bad at the day level, right? Gap into a gap down. So I expect this whole thing, potentially could get filled. You see a huge volume over average, 30, 20, 27 million shares traded in that day alone. You see RSI down, MACD down, and the same things at the month level, right? If you look at the month level, huge red candle here to the downside, boom. You could argue it was in correction territory. Even for RSI, anything above 70 is potentially correction area, and that's exactly what we saw here. So, RSI is going down, MACD's pinching from a fucking high up there. So this thing could potentially go all the way to 30 to reverse at the month level, possibly, right? Sometimes you do see that. And you see that at the week level. Hey, it had a really indecision doji here, almost a hammer straight to the downside at the week level, right? So it's busting all these levels of support. And it's busting through the moving averages, right? So hopefully we'll find some support down here, but there's a long way to go for it to hit reversal territory of 30 at the week level because it's at 47, 48, right? MACD's going down. So, across different time frames, month, week, day, it looks horrible for Nike, and I think we'll seek that pressure, but I want to use that as a buying opportunity because I still believe in Nike long term. So, anyways, wrapping it up, 20 minutes or less. Let's go. Oscar Health, Disney, SoFi, GRIN, CXM, and Nike. Also, go get some merch. Look at this bad boy right here. It actually feels really good. Real bullish on the back or on the front. Some wears on the back. I'm actually going to change this up because maybe people don't want to have that on the back. But anyways, go sign up for our newsletter at realbullish.com. And, maybe the next 50 people that sign up, I'll do a random drawing and throw in a shirt, right? Whatever. It's just fun for me. But anyways, everyone have a great week. Peace.